Friends, welcome to my channel. So before going into the Nifty and Bank Nifty, I just want to make a quick analysis in the Dow Jones because I found a little bit of a good pattern in the Dow Jones. So as we are moving according to the global market, so I thought I'm just make a quick video because I do my analysis because I correlate the market with crude, with oil, and with the European markets and Asian markets, and as well as the American markets. I correlate because I'm a trader and I've been trading past from so many years, and I know how to correlate with different markets because each and every market is synced in some other way. So I usually see the Asian markets in the morning, and later in the afternoon session, like I'll be seeing the European markets, and later in the evening, like I'll be looking into the American markets as well, and with that, like I'll be looking into the crude and gold and silver and the commodities as well. So because these entire markets are correlated, and entire markets has been funded by the hedge funds and the banks and the institutions, so they manage their positions by managing all these things. So they sometimes move the funds from commodities to the equities, and from equities to the currency market. So I know how it works, so I correlate sometimes. So I just want to make a quick video on the Dow Jones because I've been seeing a good pattern in the Dow Jones. So if you look into the Dow Jones, like there was a quick sell-off because of the global negative sentiments, and there was a quick pullback. Like this is a profit booking area. You can notice like the profit booking area, and new sellers have entered into the market. So again, the sellers came into the market, but they couldn't bring this low, like 32,600. They couldn't bring the low, and once they've tested, and second time they've done, third time there was a profit booking, fourth, fifth, and there was a ledge here. I will be explaining what is a ledge in the classes very clearly. So this was a ledge. I can see very clearly this is a ledge, and the ledge is somewhere here. Once, twice, 3, 4, 5, 6 times the the seller started to sell the market, but the ledge couldn't break here, so the sellers gave up. And yesterday, like we have seen, a very good amount of a buying has taken place in the market. So that is why today we opened a very big gap up as well. So, and it's a very good bullish candle. So what I might expect, I'm just expecting today the market might break out these levels, and we might see somewhere like 34,200 levels. I'm expecting up until here 34,200 levels, because this area is a good fair value area, and there's a good good accumulation has taken place here, and the ledge couldn't break here. We might see a good amount of a breakout of this area, and we might see a good bullish candle, because whenever you have a good breakout, you don't have a retracements and other funny things. So if the breakout happens, if the genuine breakout happens, like we might see a good breakout and a good bullish candle in the Dow Jones today, and somewhere like 33,200 or 34,200 or 34,000 round figure levels, like we might see a good breakout, and the price might sustain here. If this happens, like we might see a gap up tomorrow. Why I'm expecting the gap up? I've correlated this market, the American markets, with the Indian markets as well. What I noticed in the price action today was if you notice here very clearly, the seller came here at these levels, and he started to hit very hardly. Like you can notice, you can see here, very big amount of the selling came. 108,000 contracts has been sold, but absolutely there wasn't a buyer here. And not even once, like the second time the seller came and started to hit very hardly. That means again the seller came, that there was a ledge here, the ledge couldn't break. And another interesting thing is the ledge came once again here. You can notice here again the seller came, but the ledge couldn't break. Here the seller came, it couldn't break. The seller came, it couldn't break. So it is very much confirmation for me, like someone has bought very aggressively at these levels. Tomorrow the price is going to auction at a higher and higher levels. Either we might see a gap up of 200 points, or 100 to 200 points of a gap up, or if we get a flat opening, like we'll be having a fantastic opportunity, like the market might rally at a higher levels up until 17,100 and 17,200 levels. Well, today completely it was a sideways market, and I was just watching the market. I was giving you the calls at the Bank Nifty. I realized at the first 5 minutes candle itself today the market will be in a range, and I thought like the market might test to certain of my levels, but the market turned over and we at certain points we exited at cost to cost areas, and sometimes we gave the stop loss, but overall end of the day, like, we made a very good amount of a profit. So the interesting thing is, like, the buyers have accumulated the market and they are going to take the market higher, but the thing is, like, we need to see the flat opening. If we have a gap up opening, like, we might not see the momentum, there will be a profit booking. End of the day, if you notice, like, there's a good amount of a buying has taken place here. 700,000 of the contracts has been brought by a big players. That means the market is damn sure, like, the market is going to go at a higher levels. So we'll go into our Nifty chart and see, like, what it has happened. So as I mentioned on the previous day, so this was a fair value area, like the market has accumulated for some time, and there's a breakout, but I couldn't say this is breakout. Like, we need to see a big bullish candle for the breakout, but this was a accumulation stage. If follow through happens, like, we might see a good momentum on the higher levels. So I'll take you at a 5 minutes time frame. So in the 5 minutes time frame, you can notice very clearly the market was completely at a sideways range. It was completely at a sideways range, and here you can't see at a candlesticks, like, what is happening at the lower levels. You can just see the double bottoms or triple bottoms, what you can call. But here, with the help of the order flow, you can very clearly see someone is buying at these levels, and this is very much clear, like, there is a buyer in the market and the buyer is going to auction the price at a higher levels. So if the market is opening a flat, we'll be definitely looking to buy the market, and our stop loss should be like 16,900 levels or below this swing. I would say, like, this swing should be your stop loss, and you can hold up until 330, or first target should be like 17,100, and next target, if the market is going in a flow, like, we should maintain up until 17,200 levels. So market either might come down and it might test these levels sometimes. So that is why I'm telling you, like, if the market is opening flat and if it is crossing this swing, then only we'll be looking to buy the market. If it is coming down, we'll just wait for the price action. Whenever it is going on the other side, on the call side, we'll be definitely looking to buy the market. So selling side, I don't recommend as of now, because once if the market is crossing these levels as well, we might see a buying again. Let's see if these levels are crossing, and if the price is holding below these levels, then we'll be looking to sell the market, and our target should be like somewhere this levels, like 16,700 levels, like 170 points of a we can keep the stop loss somewhere here above, like, 16,900 levels, and we can target up until 16,700 levels. So I've seen some of the videos, like, they were making stupid analysis, like every 10-20 points you'll be having a resistance. So never know, resistance doesn't work like that. Yes, short term algorithms will be booking the profit. You can notice here these levels is short term algorithm profit, and this is not a resistance level. Resistance is nothing but, like, someone is giving a resistance and he is providing a good number of selling, like someone is selling with a huge quantity, but still the price is at a discounted price. You can notice the price is corrected from, say, 18,500 to 16,900. It's fair, a discounted price. So people, they'll be ready to buy the market. No one is ready to sell the market. So the market participants are accumulating somewhere here. So don't fall into this kind of fools or stupid people who just say you, like, 20-30 points of a resistances here and there. Resistance doesn't work like that. I'll be making a special video what is resistance and what is support. I'm going to explain you in a proper way, like, what is support and what is resistance. And well, like, we'll be looking to buy the market itself, and first target should be like 17,100 and 17,200. Please look for buying the market. If we have the gap down and if it is crossing below these levels itself, we'll be looking to sell the market. Sometimes what market does is, like, even though if the market is coming down, it might even come inside this range. So I'll be a little bit of bullish. I'll be looking for a bullish, because for me, like, correlated markets are also looking bullish. So I might go for a buying side itself. So selling, we'll see below these levels itself, we'll look for selling the market. Well, we'll go into the bank nifty. The same thing in the bank nifty as well. The bank nifty has done the same thing. Just a second, I'll take you a bank nifty. So bank nifty also the same thing, like the bank nifty was also in a sideways mode and someone was accumulating at these levels, but I couldn't see much of accumulation in the bank nifty. You can notice, like, very thin amount of accumulation was happening, and this was a bit confusing for me. Like, even if there is a buyer, the seller has to be aggressive. If someone is sitting here but the seller is stopping the selling here, like seller is stopping, he is not selling very aggressively. As you can notice in the Nifty, there is seller is selling aggressively, and he is selling to break the ledge. But here, whenever the price is coming to the selling point, the selling is stopping, like the seller is stopping. I don't want to sell at these levels. That means even though someone is sitting here but still is absorbing, but no one is providing the liquidity for him. That means like the big players are playing the market. You can notice here some 25,000 contracts has been sold, but absolutely 1,500 contracts has been bought here. It clearly shows like there is someone sitting, and they are buying the market very, very aggressively. Well, it was completely a sideways market today, and couple of stops got triggered, and later we made 100 points of a profit, and that was enough, I would say, like to make a profit, even though market was not offering anything. If you notice, like completely the market is in a range. The completely market was in a range. If you notice the first 5 minutes candle, like this was just a big bullish candle, and everything got flushed into, there was someone was sitting here again, he auctioned at a higher levels, and later everything got flushed here. We captured this move, and we captured even this move as well, and we made a profit, and rest of the day was, it was some completely a sideways range. So what strategy we need to apply for the tomorrow's market? So I'll take you at a daily time frame first, and then we'll do the intraday, like what we need to do. Just a second, I'll just take off all these drawings. Well, if you notice into the bank nifty, the bank nifty has accumulated here, and there's a breakout, and here the accumulation came, and the accumulation area is this one. Because of the volatility, like the market came down and just bounced back immediately. So there's a breakout. I don't call it as a breakout, because still it is accumulation candle. So first thing what we need to do is, like as soon as the market opens flat, and if it goes higher, we need to buy the market, and first target should be like 36,000 levels, and next should be like 36,200 levels. So why 36,200 levels? Like the algorithms will recognize the prices at 36,200 levels, and they start to book the profit. Before the algorithms start to book the profit, you have to exit from the market. If the algorithms are entering into the market, and if they are booking the profit, they'll take all your profit, and they'll bring the option premiums to the same price, and tomorrow the option premiums will decay very, very, very fast. So before the algorithms are taking the profit, as we the retailer traders, we need to book the profits immediately. So first target should be like 36,000, and the next target should be like 36,200 levels. If the price is going higher and higher, then we'll be looking to sit the market, and 36,500 and 37,000 levels also we might see, but I don't say like we can see tomorrow. We might see like 36,200 levels tomorrow for sure, if the price is opening flat, and if it is crossing today's high. And just a second, I'll take you a 5 minutes time frame, because usually we do the trading at a 5 minutes time frame. So 36,000 and 36,500. So if the market is opening flat, compared to the bank nifty is looking like a little bit weak, I would say. Still it is trading in the range. So if the price is crossing 35,500 levels, and if the price is coming below 35,500 levels, we'll be definitely looking to sell the market, and the first target should be like 35,000 levels. Well, I haven't seen much of accumulation in the bank nifty. And in the Nifty, yes, absolutely, there is a good amount of an accumulation has taken place. So in the bank nifty, like I gave you the two scenarios: if the market is opening flat, and if it is crossing 35,820 levels, and if it is the price is going higher, first target should be like 36,000 levels, and next target should be like 36,200 levels. Please try to book your profit. Don't give the profit for the algorithms, and let the algorithms take you the profit. You can notice here the price came immediately very aggressively, and when the algorithm started to book the profits, all the premium has been gone, like nearly 60-70 points of a premium has gone just in this candle. So this the profit booking is from the algorithms. So before algorithms enter, we have to enter, and we have to close our trade. So that is what I teach for my students, and when to exit and when to enter, and how you need to see the markets, not to just sit blindly. Like certain times, yes, blindly you can sit the market, but certain times you have to book the profits before algorithms, before the high frequency traders, before the big institutions, before retail traders enter into the positions. You have to enter, and you have to exit your positions. And one more thing, like most of the retailers, they were asking me, sir, as soon as the market is opening, you are giving the calls. Why don't you give the call somewhere like 10 o'clock or 12 o'clock? I just want to tell you one thing. Remember, this is a stock market. The opportunity lies when the market is open. As soon as the market is open, take for instance, as soon as the market is open tomorrow, the people who are looking to buy the market, not only me, everyone can see this market. As soon as the market is open tomorrow, the algorithms, the big institutions, the banks, everyone, they'll be in the trade. They want to either sell or either they want to buy the market. So whenever the big players are entering into the market, whenever the big institutions are entering into the market, whenever the banks are entering into the market, first 1 minute to 5 minutes there will be too much of a volume, too much of a liquidity, too much of a volatility. So whenever these things are combining, then the price starts to keep moving on the either side. The price moves on the higher side or price comes to the lower side. This is the when we can capture this momentum. You can notice like first 5 minutes, first 10 to 15 minutes, we made a good amount of a profit. You can notice any time, like even take example yesterday, like look here, like first 15 to 20 minutes there is too much of a liquidity, the people know about. Here there's a profit booking started, the liquidity is available, the liquidity is abandoned. Even if you notice here the market went up, we can easily capture this move. This is like 100 points of a move. Some stupid people, like stupid retailers who are they just enter into the market and they don't know anything about the stock market, and they just come and comment like saying like sir, why don't you give the call like after 10 o'clock or 12 o'clock or 1 o'clock. Market doesn't work on your timings. The market runs whenever the opportunity is there. Whenever the opportunities are there, you have to enter into the market. Look here, as soon as the market opened, the market was just going higher and higher and higher prices. We captured all the way this one 300-400 points. We captured this move, and later entire the market is on the sideways mode. Please understand why I did my analysis, and I know how the market works. I know how the financial institutions work. I'm not a newbie, or I'm not a fresher, or I'm not the one who just come and do like a simple analysis based on the support and resistance. No, I've been doing this work past from 8 to 10 years, and I know how it works. How I know where the liquidity comes. I know where the big players work. I know where the algorithms take the stops, where the stop losses get triggered. When the stops are there in the market, that stops you can make it as an opportunity. I know where institutional stop losses will trigger. Can anyone say like this is a institutional stop losses? I can easily say this is my favorite setup. You can go and watch this one. This is an institutional stops. This is my favorite setup. Whenever I see this kind of setups, I put my size very big, because I've been seeing this kind of markets from so long time. Not one or two. I've been trading so many markets. I used to trade like 6 markets, and I used to trade in the proprietary firm as well. I was putting a big size. Now I'm trading by myself. Sorry. So I know how the financial institutions work. Based on that, I give the calls. If you're happy, you can take the calls. If you're not happy, just leave it. You just avoid it. I'm not forcing you to take the calls. I'm making you to make certain amount of a profit from the financial markets. These financial markets can make you bankrupt, but only the thing is like you need to be aware, like where the stops are getting triggered, where the big players are entering into the market, where the liquidity is premium, where the liquidity is expensive. When the liquidity is expensive, when the liquidity is premium, not just drawing a support, not just drawing the resistance. No, this doesn't work into the financial markets. If you can see, every institutions can see, every algorithms can see, every big players can see, every retailers can see. That trades are called as an obvious trades. So before they know, you have to identify. That is a skill, that is the art of the trading. This setup, whenever I see this kind of a setup, I push my size very big. Sometimes I put like 50,000, 100,000 contracts of an option. Sometimes even I trade with the futures as well, because this is my favorite setup. I've been seeing from so long time. So don't come and ask even like private messages, sir, why will you give as soon as the market opens, you'll give the calls. I have my view, I have my opinion at the market, I have my strategies. Based on that, I give the calls. If you're happy, please do take the calls. If not, you can stay away. You can go and join any of the premium calls, like whoever gives you a premium calls for you. I'm not pushing you to join my channel and sit at my trades. Well, I said too much. If you like my video, please do share it and comment it at the comment box, and I'm going to reply for all your comments. Well, thank you, and thank you so much.